Good morning, students. This video will discuss about financing decisions. Okay. Uh, we have already discussed. We have already discussed this uh, factors affecting investing decisions. So in this video, we'll discuss some um, financing decisions. The financing decisions. You can see the pictures that the person is thinking that from which source we have to get the finance for the business, means we have to go to the debt or we have to choose the funds from equity. So these are the two basic source of generating funds. So we will discuss about this in this video. Okay. The financing decision, it is concerned with the quantum of finance to be raised from various long-term sources. So debt is also a long-term source, and equity, or obviously it is a long-term source. So they are shareholders fund and borrowed fund, such as shares, debentures, loans, etc. So from these sources we can collect our funds. But a proper mix of the above securities is very much essential for maintaining a good capital structure of the company. Actually, you cannot say that we will get the money only from shares, we'll get the money only from debentures, or we have to get our funds from the mixture of both, means shares and debentures. So there the decision has to be taken very carefully. Okay. So there are some factors which decide that what type of decision should be taken. Means if we are taking financial decision, we should go for debt or we should go for equity. Okay. This type of decision should be taken. So the factors which tells about this. The first is cost. Try to obtain the funds from cheaper sources. Obviously, which the source जो भी आपका that is very much cheaper, that should be chosen. Okay. Next is risk. Actually, risk factor in each source must be considered. If we think about debt, so the debt is always risky, because if the company is getting loss, the company has to pay the interest, and obviously there the debt has to be returned after expiry of particular time. Okay, so this should be seen by the company. Next is flotation cost of raising finance should be less. ऐसा नहीं है कि if we are requiring 1 lakh rupees and for getting this 1 lakh we have to pay rupees 20,000. Okay, so means actually we are getting 80,000. ठीक, this is suppose this is a scenario of suppose debt है ना. If you are going for equity, ठीक, and we are requiring 1 lakh and we have to pay 5,000 for getting rupees 1 lakh. So we are actually getting 95,000. So means this is the cheaper source of getting finance. ठीक है. Next is cash flow position. Obviously, a stronger cash flow position recommends a more debt financing. Cash flow position means the incoming of cash. ठीक, it means suppose the company is getting frequently cash. The inflow and outflow position of the company regarding the cash is very much strong. So if the company company has to pay the interest, so interest on debentures, interest on loan, the company can easily pay it. So this situation is very much favorable for generating funds through debt. Okay. Then fixed operating costs like rent, insurance, premium, salaries are high. It is better to reduce debt financing having fixed interest burden. देखिए, if you are taking debt, okay, so you have to pay interest, and this is a fixed cost, because if the company is getting loss, the interest has to be paid. Okay, and the same way other fixed operating costs are like rent, it is a fixed operating cost. Insurance premium it is also a fixed operating cost. So if these type of costs are already high in the company, so the company should not go for this. The company should not increase its fixed cost by taking funds from debt. Okay. Factors affecting financing decision, that is First, next is control. More dependence on owners fund will reduce control among the existing shareholders. If you are going to if you are going to get funds through shares, so obviously the controlling of management will reduce. Okay. Next is capital market consideration. Capital market consideration means during raising funds, the in capital market it is easy to accumulate shareholders fund, otherwise better to depend on borrowed fund. Okay, if the market condition is very good, you can go for shares. And this is a simple logic. The market condition is good, you can go for shares. If the market conditions are not good, you can go for debentures. You can easily see the statistics of some few months back. During this corona period, the stock market was very low, so in that type of situation, the company should go for debentures. Okay, this is the summary of this factors affecting this financing decision: cost, risk, valuation cost, cash flow position, fixed cost, control, and capital market consideration. Okay, and next is dividend decision. So it is concerned with the disposal of profits. Means if the company is getting suppose 1 lakh profit, so how much profit, how much part of this profit should be distributed among the shareholders, है ना. तो ये किस तरह से decide करेंगे, that should be taken wisely. That decision should be taken very wisely. Okay. A portion of the profit is to be retained in the business for growth and expansion. That part of profit is called retained earning, and the rest of the profit is to be distributed to the shareholders from the dividends. Okay. Now the factors: amount of earnings. Dividend decision is always depend on the amount of profit during the current period. Obviously, if you are getting more and more profit, you will distribute more and more dividend. Okay. Then stability of earning. Stability of earning promotes higher dividend. You are getting profit. Okay, so every year you are getting profit, and the consistency of increasing the profit is very good, so you should declare more dividend. Okay. Then stability of dividend. It will improve the confidence of shareholders and higher reputation of the company. Suppose if the company is getting low profit, you are obviously giving dividend. If the company is getting high profit, you are giving the dividend. So irrespective of getting the profit, sometimes company declare dividends. So for this, the company get higher reputation. Okay. Next is growth opportunities. Obviously, fewer dividends may be given to the investors if the company is having growth and expansion projects. Company को लग रहा है कि if we want to invest this profit in the some projects, so company will declare less dividend. Okay. Next is cash flow position. Payment of dividend involves outflow of cash, obviously. Therefore, enough cash must be available for the declaration of dividend. Okay. So if the cash flow position is good, the company can declare higher dividends. Next is shareholders preference. So normally shareholders want to get regular income from the investment, hence at least a minimum dividend may be distributed every year. Okay. So actually shareholders have some expectancies from from company. The shareholders will get a regular income from the company. If the company is thinking that the dividend should be paid to the shareholders every year because they are the shareholders and they should get the dividend, so company can declare regular dividends, but other things should also be seen before declaring the dividend. Then taxation policy. If the tax on dividend is higher, it is better to pay less away of dividend. Okay. But the dividends are free of tax in the hands of shareholders, as dividend distribution is tax levied on companies. सीधी सी बात है, tax अगर आपको, if the company has to pay more tax, the dividend should be declared less. Okay. Then stock market reactions. Obviously, investors generally evaluate the companies on the basis of their dividend declaration status. ठीक है. The company is declaring more dividends, the company considered to be very good. Okay. Then access to capital market. So reputed companies generally have easy access to the capital market, and therefore they may depend on a less retained earnings to finance their growth. So reputed company can easily get the funds from the share market, or company can declare higher dividends. Okay. Legal constraints क्या, while declaring dividends the companies have to follow restriction laid down by the Companies Act. Obviously ऐसा नहीं अपनी मर्जी से companies कर देंगे, some restrictions are always there. Then contractual constraints, while granting loans to a company, sometimes the lender may impose certain restrictions on the payment of dividend in future. Okay, the loan provider can always put some restrictions on declaring dividend. So these things should also be seen. So there are the factors affecting dividend decisions: the amount of earning, stability of earning, stability of dividend, growth opportunities, cash flow position, and shareholders preference. Okay. And taxation policies, stock market reactions, access to market capital, legal constraints, and contractual constraints. Okay. In our next video we will discuss the financial planning. Okay. If you have any doubt, any query, you can ask me. Thank you, बच्चों.